Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about TCI Express, a very interesting stock in the logistics space. Let's understand how has the number going on and whether you should buy the stock at current levels or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about TCI Express, here's a small request that kindly support me through Patreon. Even a $2 support or 140 rupees support per month would go a great deal in helping me build this channel even further and motivate me to make further videos and do dedicated research. I cannot start with the join button until I have 10,000 subscribers, so kindly subscribe to my channel as well. Now coming to the company, the company was established in 1996 and it was part of the TCI group. So there are a lot of companies that are related to the TCI group, and one of them is TCI Express, which is into courier services, works in express cargo delivery and courier deliveries, has more than 40,000 delivery points across India and in some parts of the world as well. Big play for online consumption because they are into delivering products from Amazon, Flipkart, etc. as well. If you look at the financials of the company, then although for FY20 Q3, the sales went up by just 2%, but the profit growth was pretty good at around 36%. It is completely debt free, so had a little bit of interest till last year, but even that has gone, and very minute level of debt is there. The return on equity is around 16.8%, and net profit margin is average at 10%, which needs to be improved, I would say. But lower taxes has boosted numbers, so this time around they paid tax of around 20-22%, whereas earlier they were paying taxes of northwards of 30-35%. If you look at the performance of the stock overall and the company, the results have been strong, especially on the bottom line that we have seen. Consistent dividend pay, so they are paying good dividend. In fact, a couple of interim dividends they have paid along with the final dividend. The stock is up 45% in the last 2 years, but it has corrected sharply in the last 1 month. So we have seen massive correction in the stock over the last 1 month, as with any other stock in the market, with the market going from 12,500 all the way to 8,500. They have done well in difficult economic scenarios, so there's no question about it that most of the courier and you can say logistic companies are in either losses or very less profits, and the profit has been declining year on year, but the TCI Express has been putting on very good numbers from the even in these kind of problematic times. Attractively priced on a long term basis at around 20, 25, 26 times, although earlier, just a year back, it was trading at around 40, 43 times earnings. If you look at the valuations of the company, as I said, 26 times earnings it is trading at, very attractive. Earlier, as I said, was it was trading at around 42, 43 times. So there has been a value destruction, you would say, in this company, and these are the jewels that we have to look at. So a 35% drop in valuation at the moment. It has corrected appreciably in the recent times, so around 45% correction has taken place from the highs. Results, as you have just seen, results have been pretty good. The return ratios are good, not exceptional, but they are fine. So that is not a sense of worry, but net profit margins or profit margins could be improved. There is no debt on the company, and the dividend payout is pretty decent. Promoter holding is northwards of 60%. It is around 66-68%, which augurs well for the company, and it means that the company is in strong hands at the moment. If you look at the technicals of the stock, then the 200 DMA is around 715 and the 100 DMA is at around 780. So it looks extremely weak on chart. I mean, around 640, 650 levels, it looks extremely weak on charts. But these are the levels for long-term investors to get into the stock, because whenever the stock moves up higher, it would be on the back of very good news, numbers, etc. And then the valuations will not be the same. So that's the double-edged sword of investing at the moment. So that's why if you want to invest big in logistic company, it would be these times to get into these troubled times. The short-term support is around 615, and if you are a long-term player, then keep a stop between 525 and 550 region, around that. It has corrected, as I said, more than 45%. It has corrected actually 55% over the last 1 month, and probably keeping a stop at 550, one can buy into it for a 2 to 3 year time horizon. So what needs to be done? I believe you can buy it as an SIP over the next 1 year. It is a portfolio play and have a 5+ year time horizon. Keep up your accumulating on dips. So I believe that over time these things would find its way. So all these issues with the virus, etc., would go through in the next 3 to 6 months, and these companies would do well, but then the valuations will not remain same. I think it is a solid company to invest into, albeit in a pretty difficult sector. So one can slowly accumulate the stock at these levels and look for a 4 5 year time horizon. Whenever the stock moves up, say 80%, 100% from here, one can exit the stock. I'm not saying that keep the stock for all your time frame, but just keep it for a kind of a profit for doubling of the stock or so in the next 3 to 4 years. So this was my video on TCI Express. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.